unbalanced volume. This indicator can make you a lot of money because it specializes in one thing, finding tops and bottom. And that is where so much money can be made. If you can identify when the market is bottoming out and starting to move back up, oh my gosh, get in that low. You can make a lot of money. And conversely, market's topping out, go short, lots of money. Great risk-reward ratio. And that's where this indicator comes in. And I'm going to show you exactly how to trade it, by the way. And then I'm going to give you a little secret extra sauce. And this is something that very few people use or even know about. So we're going to finish with that extra technique, absolutely free. So I'm going to show you all how to do this, and we're going to try to keep this video in less than 10 minutes. So good stuff. All right, so let's just get down on it, as Cool in the Gang famously once said. It has to do with supply demand, and that's really what makes markets go up and down, supply demand. So it is measuring all the buying power and all the selling power and comparing the two. So let's show you how to trade it. It's actually pretty darn simple. So we're going to look at these highs here, and we've got a little bit of a higher high, pretty close to even, double top kind of pattern there. And then if you look over here, here's OBB. And here we see that, oh, it's going down. So you've got your classic divergence. And a lot of people look for divergences on OBV, and that's pretty good. But everybody on the Turbo knows about that. But it's not bad. It's good. I'm going to show you a couple of other things that a lot of people don't look at. So that's what, and that's showing, again, that, yeah, markets maintaining its same price levels, but on a shift of supply demand. So not as much buying now and more selling. And that, man, that's an insight into the market that, by the way, the price action isn't showing you. And that's what we want with an indicator. We want an indicator that's showing us something that price bars don't show us. So people say, well, I don't need no darn indicators. All I need is price. I love those people. And more specifically, I like to take the side or the other side of their trades. So we want to see things that most people aren't seeing. And as you can see, we get a nice down move. Okay, OBV comes on down and it continues. Now, let me show you another technique. So divergence, that's number one. Let me show you another technique. As opposed to divergence, we're just looking for confirmation. So in other words, when we got our higher low here on price, we also get OBV going up on balanced volume. And so it's confirming it. No divergence, but it's confirming it. And it is just saying, yeah, price is going up. And the shift of supply demand is taking place as well, so that now more buyers are overwhelming sellers. So you don't just need divergence. In fact, I will tell you that divergences, they're great and they do just come up, but not as often. The vast majority of time, this indicator is going to help you by looking at confirmation, where it's going in the same direction. Another way that the indicator can be used is not only for tops and bottoms of markets, but also for consolidation, breakouts of consolidation, which again can be very profitable. So here we see Apple had moved up and then we get earning. All right, so we see a big emotional knee-jerk reaction to earnings. It comes back down. We say OBV comes down. Well, that makes sense, right? We got a lot of selling. But remember, with earnings, and this is very important to realize, that news trumps technical. I want to break that down. That's a very important slogan for you to remember. News trumps technicals. So when important news comes out, whether it's an earnings report for a stock or CPI data or FOMC, whatever the market's really concerned about at that time, at that point, people are just interested in that report, that economic report. They are not, and they don't care what your OBV is or your stochastic, your RSI, your moving averages, your CCI, your elemental P. Nobody cares about technical analysis at that point. People have an emotional knee-jerk reaction. So indicators tend to not work great during these types of economic news or earnings, whatever. Okay, so whenever you get an emotional reaction, all logic goes out the window. So when we're looking at indicators, we are looking for a logical move, of supply demand imbalance shifting and following and all that sort of thing. So generally, I'll stay out of earnings, or some people do bracket trades. That's a video for another day. So now we get into consolidation. So that's what we're going to talk about here is consolidation. So, all right, market goes down, comes back up, and it goes right back to about where the market was during earnings. So we get this is where our emotional knee-jerk reaction happens. And then the market comes back to where the earnings was right at this point. It just kind of hovers around there, and now it's trying to decide, what do we think? Now that we've digested the information, now that we've had our initial emotional knee-jerk reaction, oh wait, let's calm down, let's read the report, not just the headline, and what do we really think here? And it's quite common for markets to consolidate. Can we still use OBV? Oh, absolutely, absolutely. So as we go forward, we'll see that when it breaks out of this consolidation, we do indeed again get a very, very nice confirmation here, lower high on OBV. So we're seeing now that shift. In fact, here we're seeing accumulation. And why are we seeing accumulation here? We're seeing it because after that emotional knee-jerk reaction, then the market, it comes back in and it buys it back up. Then it just goes sideways, and it's trying to decide what it wants to do, and OBV pretty much goes sideways as well, until we get to that moment of decision where the market says, okay, and then it tips its hand, and even though these prices are all around the same, the shift turns into selling, and down she goes. All right, let's finish up with the little secret sauce that I was going to share with you. OBV is a kind of a choppy indicator, right? There's a lot of wiggles and jiggles, and it doesn't just form these nice long straight lines. And that makes it hard for a lot of people to read it. And I think really for anyone, it becomes challenging because not every little move up and down means anything. So how do we resolve that? The way we resolve that is we come on in here and, well, first of all, what we're going to do is we're going to add a moving average to OBV. So the way to do that, at least on TradingView, is you got to click on OBV. I'm right-clicking on it. And then I go up here to add indicator / strategy on OBV. This is creating an indicator on an indicator. That's what we're doing here. All right. And so we're going to add an exponential moving average. I'm going to use the 9-period exponential moving average. You can play around with that if you want to. There's no magic to the 9, but I like the 9. And then I'm going to make it black, and let's make it thicker so we can really, really see it. All right. And there you go. So what this does is it smooths out all the noise of the indicator. Yeah, we got lower high, and OBV now has gone below the moving average. And the moving average, even though we get some jiggles and wiggles, look here, even OBV makes a little higher high. That's meaningless. That doesn't mean anything. Like I said, all of the little wiggles and jiggles don't mean anything. The fact that we get a little higher low there, this can fake you out. So we add the moving average to just make it smoother. We could just stay in this whole time. And that's the beauty of it, is it makes it easier to read and easier to stay into a trade. So there you go. That's the secret sauce. Now, all of this that I've shared with you is big picture stuff, getting you on the right side of the market. We still need to make sure that we get in at the exact right point. And for that, we need a scalpel tool in our trading toolbox. So for that, I use my market timing indicator, and I give this away free to all my viewers. You're a viewer, so I give it to you as well. I put together a little tutorial. I like to explain things and not just give you an indicator blindly and say, go figure it out. So I put together I used to do a live webinar. I've recorded it now, so you can view it anytime that you want. And everything's free. Indicators free, training's free, everything's free. So just go to indicatorwebinar.com. Like I say, it's recorded for you now. And go get it. It's my gift to you. Check it out, and I'll see you on the inside.